Hello and what is going on, lovely people of the internet? It is Fubo here with another video for you guys today. Today we're going to be discussing why Fubo TV stock dropped a significant portion. As I'm speaking right now, this stock has been killed on the day with the recent lawsuits. It's been attacked by multiple different law firms on this one thing, and I did a full analysis on what exactly happened. It's not really clear in these law firm reports what exactly is going on. They're very vague with their language. They basically say, this is what happened. If you suffered from any loss, this is what we'll do, blah, blah, blah. And basically, I think it's just a money grab from the lawyers, but I'll explain why as we get into the video. If you guys are not already subscribed to this channel, make sure you subscribe to this channel and turn on post notifications, because we do these type of updates every single day and you don't want to miss it. If your stock falls, you want to know, if you're panicking, you want to know what's going to happen, I make videos like this. So definitely subscribe to the channel. And the number one thing you can do for me is to like this video, because liking this video will help show this video to more people, help expand my channel, expand my growth as a creator. So yeah, that's the one thing I ask for you guys to do. That being said, let's get right into the video. What's going on, guys? As we speak right now, Fubo TV is sitting at down 19.08% on the day. This is pretty crazy. I'm kind of sad. I was up on this stock at one point. Now I'm down 25%. A lot of it because of what happened today. So I'm not particularly excited with what's going on here, but we're going to get right into this. As you can see, there are a few different law firms making these claims. So we've got this one, we've got the Shaw law firm, the Gross law firm, and the Jakubowicz law firm. Sorry about that. And I'm just going to read this first one because it basically had the best explanation. So, according to the complaint, the company made false and misleading statements to the market. Fubo TV's growth in profitability and subscribers was unsustainable past the seasonal surge in subscriber levels. The company's product offering suffered from undisclosed cost increases. The company could not successfully capitalize on its sports wagering opportunity or successfully act as a sports book. The company was not in a position to achieve long-term advertising revenue growth. Based on these facts, the company's public statements were false and materially misleading throughout the class period. When the market learned the truth about Fubo TV, investors suffered damages. So this is how I see it. Basically, yesterday on March 25th, Fubo TV had to file their 10K annual report, which basically gives lawyers this huge body of text and documents and financial statements that they can use to rip apart a company. So it doesn't always happen, especially with a company that has a lot of lawyers themselves. They can fight back. They don't see the opportunity as much. However, lawyers get paid based on what they charge their clients. They can make a lot of money just by doing these lawsuits, even if they don't win. So in the end, you as a shareholder, even if you sign up for this lawsuit and you're like, yeah, I lost money, I want to be part of this class action lawsuit. In the end, the lawyers are the ones who are going to win, not you. You're going to get such a petty reward for this, while the lawyers are the ones who are actually going to take home the prize on this. So lawyers have every incentive to rip apart this document and basically say whatever they want and basically claim that the company was misleading. So when a stock like Fubo is going down 42% in the past month, and then on top of that they released their 10K filing, it's very easy for a law firm to pick apart this whole entire document. This document's like 100 pages long and it's filed by the company, so it's so easy for the company to just go through this and say, oh, this is bad, this caused the stock to drop. So you see what I mean by this? So anyways, I did some detective work myself and I skimmed through this document. I'm not reading a 100-page document, I'm sorry. However, I searched for some keywords. All we got was one little paragraph from the lawyers, alright? And they had an entire 100 pages for the lawyers to pick apart. So we didn't really get much to work with from the lawyers. However, they did provide a few keywords, which I did search for. So we're just going to go over this one by 1. So the first thing, Fubo TV's growth in profitability and subscribers was unsustainable past the seasonal surge in subscriber levels. Guys, this is from their 10K filing. They have non-GAAP metrics. These are not actual metrics. They're just metrics the company believes are valuable. Metrics such as average subscribers and their revenue per user. These are not official financial numbers, but they are numbers that help investors, so that's why they report them. Guys, from 2019 to 2020, their average subscribers went from 234,000 to 355,000. That is a huge amount of growth in subscribers. And at the same time, the revenue per user went up as well. So as this company continues to grow, they will get more revenue per user. And as they implement more things into their business, such as the sports betting, they will get more revenue per user. So I think it's kind of misleading for the law firm to be like unsustainable past the seasonal surge in subscriber levels, because the growth in profitability is going to keep going up regardless if they keep this same rate of subscriber growth. Now, they did say that a risk factor is that this company's stock price is heavily dependent on their subscriber growth, but there's nothing in here specifically saying that subscriber growth isn't expected to increase. And I'm not really sure what they mean by seasonal surge in subscriber levels. I couldn't really find anything on that. However, the one thing I did kind of find was that the COVID-19 pandemic had an effect on their business. So maybe they're trying to claim that the COVID-19 pandemic helped their business. I don't know if that's the case. However, yeah, I'm not really sure what they mean by seasonal surge. So I apologize. So the next thing we'll look at, the company's product offerings suffered from undisclosed cost increases. So this one's gonna be a funny one. You guys are gonna like this one. So we're gonna move over here. This is basically their income statement, and this is kind of crazy. All right, so their net loss went from 38 million to 600 million in just a year. So at first you're like, wait, that's crazy. That's crazy. Where did all this come from? But listen, this is because this company went public through a SPAC merger in 2020, so they did not have the numbers required to accurately report this statement. So this is what the lawyers are coming after. They see numbers like this, they're like, oh, this is prime opportunity. So I believe they are specifying the operating loss because, as you can see, they're talking about the product offerings and the undisclosed cost increases from that. So that sounds like an operational cost to me. So we're just going to take a look at what basically increased. So most of this is intangible assets and goodwill. And intangible assets and goodwill isn't like an actual expense. It's kind of just like a fake expense used for tax purposes. So goodwill is basically the premium you pay for a company. So basically, this is the SPAC acquisition company that is making these statements because Fubo TV was not the company. They merged with them. So this is basically the premium they're saying that they paid for Fubo TV, which is why this has raised the expense, and it helps them in like a tax advantage way. If they can get someone to say that Fubo is valued at 1 billion, but then they acquire Fubo for 2 billion, then they have 1 billion in goodwill, which is an expense, but it's not really an expense. So that was just a hypothetical to basically explain what's going on. So right here, they briefly touch on the subscriber-related expenses, and they say that it's due to affiliate distribution rights and other distribution costs. So I think this might be what the law firm is going for. So I'm not 100% sure what exactly affiliate distribution rights are. I did a few Google searches, but I could not really figure out an accurate definition on affiliate distribution rights. However, I'm going to assume that's basically what they have to pay the networks that they host on their platform for the services that they provide. So if they have ESPN on their platform, they're going to have to pay ESPN. Simple as that. And perhaps that was misleading because they have to spend more money on the subscriber-related expenses compared to the subscriptions. However, this is a growing company. Stuff like this happens all the time. They still have to work out their negotiations. They still have to build other sources of revenue. This is what happens with a growing company. The costs typically outweigh the revenues. I don't know if this is something to worry about. We don't have operating results from the previous year, so there's nothing to compare it to. There's no way for us to see if it goes down. And from judging from that, I just think the law firms put these two pieces together and they're like, hey, misleading information right here. So that being said, this is just something that happens with a new company, and I don't think it's something to worry about right now. The next thing, the company could not successfully capitalize on its sports wagering opportunity or successfully act as a sports book. Guys, we knew this. We knew it would take a while for this to happen. Sports books aren't even legal in like most places around the world. It takes a while to do this. They're literally just throwing that in there to add insult to injury. This was not something that was undisclosed to investor. They're just throwing that in there. The company was not in a position to achieve long-term advertising revenue growth. How can you tell me they're not in a position to achieve long-term advertising revenue growth when they don't even have numbers from last year to determine whether they can even have short-term revenue growth? There's not enough information, and they're using the fact that there's not enough information because this is a new company to sue them. Like it's there's quite literally nothing to compare these results to. So I don't understand how they are making these assumptions that there's not going to be long-term advertising revenue growth based on these facts. These are not facts. Look, the company is not in a position to achieve long-term advertising revenue growth. This is quite literally the definition of an assumption that you have no proof to determine. No one knows what's going to happen in the long term with a company. So you can't just go and say this is a fact when it's not a fact. Based on these facts, the company's public statements were false and materially misleading throughout the class period. When the market learned the truth about Fubo TV, investors suffered damages. Guys, the market has been going down. It's nothing to do with the Fubo TV. Fubo TV is a growth company. It's a volatile company. It has a lot of retail speculation involved with this company. No one even knows what's going on with Fubo TV right now. That's why I'm looking into it myself. So you can't tell me that the market learned something different about Fubo TV and that's why it's suffering. If anything, the market saw these law firm reports, they got scared, and then they sold off, and according to that, they did not learn, they did not read the SEC filing. Retail investors aren't looking at this 10K filing. Me, because I'm a maniac, I'm looking at this 10K filing, but no, retail investors are not doing this, and therefore it suffers from a 20% loss in a day because these law firms issue these reports. So yes, I do think that these law firm statements were pretty manipulative and they had an effect on the share price. I don't think everyone's looking at these 10K filings themselves to see what's going on. It's pretty evident from looking at them that they didn't have the information from the previous years to even make a judgment on what's going to happen in the future, and the law firms use this lack of information to come up with a conclusion that they can make money off of. It's widely known that class action lawsuits, the lawyers get a lot of money, and then the people that they are defending get like $3. So I find it pretty ridiculous that this is a thing. However, yeah, Fubo TV's stock price has definitely dipped a lot, and I don't know if once people start realizing, oh, this is because it was a SPAC, this is because it just merged, once people start realizing that, I think that it'll start getting more attention and people will start buying the stock again. That being said, I have not done a full analysis yet on Fubo, so I can't tell you whether or not this is a good price. However, based on this report and the stock dipping this much, I can say confidently that this is not something that is fundamentally changed with the company. So in the short term, this could be seen as a discounted buying opportunity. I hope you guys have learned something from this video. This was a fun one. This one got me pretty passionate. If you guys have not already signed up for WeBull, you can use the link below and deposit $100 into WeBull and you will get 2 free stocks, and these stocks are valued up to $1,600 a stock. They usually aren't. I'm gonna be full disclosure with you guys, they usually aren't valued up to that much, but it's free money regardless. You guys can make an easy like $10 from doing this, so you might as well do it. It's free money, I'll be honest with you. And yeah, that's gonna be it for today. I hope you guys enjoyed the video. Peace.